All right guys, in this video we're going to talk all about how to trade this crazy market. And just for context, so far this year we've had inflation raging, we've had recession talks, we've had war overseas, we've had political changes with who's in government. We have all kinds of crazy stuff that's happened and it's hurt a lot of people. So especially new traders that are trying to get into this kind of market and trying to find their ground, find their footing, have had a really hard time finding not only success, but any kind of consistency at all trading in these kind of markets. And I'm gonna break down how we're doing it, how I'm doing it on my fund, how I'm doing it myself personally, how I'm teaching students how to do this, so you guys can learn something from it and find ways to make money in this kind of market. Because if you know what to look for and you know how to adjust to these different kind of conditions, it can be a great opportunity to make money. But there's certain things that you have to do, and we need to talk about what those things are. So very first tip is you need to narrow your focus. So the temptation when stuff like this happens, especially if you're new to investing or new to trading, is always trying to chase the hot thing. So at one point it was getting into cryptocurrency. That was the big thing where everyone was trying to find the next hottest crypto coin. And then it was, okay, here's your next kind of trading method that you want to get into. We're gonna get into gold or whatever because of inflation. And then you're gonna change it up and you're gonna try to do this next thing because of new conditions that are in play, or find this next kind of hot stock. And what ends up happening is you do a lot of different stuff, but you're pretty bad at all of it. And that's just kind of being honest with what I've seen most people do, is they bounce around from thing to thing based on what they think is going to change, but they're not really good at any of those things. And they end up losing money, and more importantly, they end up losing money and not really knowing what went wrong. And it's gonna be hard for you to create consistency with that kind of approach because you're always doing something different and you're never able to solve your problems because you're changing it up all the time. So the most important thing you can do is just define and narrow your range. And this is specifically how I'm going to trade in these markets. And it should be something that's repeatable. What I'm gonna talk to you about today is a very specific way to trade and some important factors to consider on how to decide whether or not this kind of approach can work for you. All right guys, so what I'm gonna talk about now is just the day trading method that I'm using in these kind of markets. And this is really, really important, okay? So I'm only actively focused on trading this one approach. Everything else I do from an investing standpoint is passive. If you try to actively be good at a bunch of different things, you're probably not going to be very good at any of them. So yes, I still invest in my long-term stock portfolio and dump a little bit of money into crypto and save money in emergency savings and cash that I'm stacking for real estate, but I'm only actively focused on trading this one thing. And that's important because if you can get good at one thing, especially in these kind of markets, you don't need to focus on all the other things, and you can still make money as long as you have these key points that I'm gonna run you through right now. So what we're gonna talk about is what makes a good strategy, and more than even getting specifically into how to do it, just what makes a good strategy in general in these kind of markets specifically. And we're gonna talk about why that is. So first thing that you're gonna want out of your trading strategy is it needs to be flexible. That means it needs to work when the market's going up, and it needs to work when the market's trending down. Lots of people found this out in 2022. Their entire strategy was based on a bull market. So yeah, it's easy to invest in any kind of shit crypto coin when the market's always going up, or it's easy to invest in all these small stock or small cap tech companies when the market's only going up. But as soon as that market cycle changes, now we're in more of a recessionary environment, an environment that's more bearish, their strategy falls apart and they lose everything that they made. The worst thing that you can have happen in any kind of strategy, really, it needs to be flexible enough to be repeatable, because ultimately, like, you guys probably want income off of it, right? And you don't want income some years and then lose it all in other years. You want income every year, which means your strategy needs to work equally as well in bull markets and in bear markets. And I'm gonna show you an example of this on the chart here. If we look at this particular day, this is December 7th, 2022, had two opportunities on this particular day that I looked to take trades, and they were in both directions. Okay, so we had an opportunity to the downside here for looking at a short position. And if you followed my stuff before, you know I like to pursue 2-to-1 type trades, which means if I'm risking $100, I can make 1,000. Terrible math, don't use that math. Risking $100 can make 200. And vice versa. Obviously that's scalable. So if you're risking $1,000, you can make 2,000. But that's what I'm pursuing in terms of profit targets. But you should be able to do that in both directions. So in this case, we had a short position here, stop up here at 2-to-1 reward to risk. So again, risk $100 to make 200. And second target we had down in here, stop below these lows, and profit target at 2-to-1, which is actually above this prior point in here. That's okay. We got hit at different times, still entering both trades and still creating wins off of each of them. Now, today was unique because we had a range that was built in, that was predefined and worked out in my pre-market plan. But the important thing is your strategy can be played both ways and you can make money in either direction. So it needs to be flexible, otherwise you're putting yourself at risk of having an entire year where you're just losing money. Now, second piece to a good strategy is it should be sector immune. What this means is that it doesn't matter if technology's beat up or some other kind of market cycle, consumer discretionary, consumer staples. It doesn't matter what sector is being beat up or what sector is going up. It shouldn't impact your strategy to the point where it doesn't work anymore. So one of the reasons you'll notice that I'm trading S&P 500 futures here, one of the reasons I like trading indexes is they're relatively sector immune. Means it doesn't matter if one sector of the market gets beat up, because it's an index, it's going to cover the market as a whole, and it's not going to influence my results as much because I'm not going to have one outlier type event that ruins an entire sector, ruin my trading approach. Now, other element that I like to think about in terms of having a good strategy in these environments is having shorter duration trades. One of the things that I've done this year is close out all my positions same day. So I talked about day trading these crazy markets. I think day trading is a great approach to actually make money in volatile markets like this. And yes, there's risks that come with day trading, just like there's risks that come with any kind of trading. And you should understand what those risks are and how to capitalize on them to create rewards. But day trading is super appealing in this kind of market because you don't have to worry about the increased changes on a day-to-day basis. So if something crazy happens in Russia and Ukraine overnight, it doesn't wreck all your positions. If the market flips from bearish to bullish overnight, you don't have to worry about what's happened to your open positions because you're back to cash at the end of every single day. You've made your money, you're out, you're done. You don't have to worry about all the market changing events that happen. And there's been a lot of that this year where my swing traders have really struggled because they're holding on position to position for multiple weeks, and there's so many changes that are going on in this kind of market that it makes that really challenging to be consistent. But if you day trade it, you're open closed, same exact day, you can create more consistency without having to worry about those market changing events. So this year, just reviewed this data. My average winning trade is about 9 minutes long. My average losing trade was about 11 minutes long, so about 10 minutes. I'm in, I'm out, I'm done, and you can still make really good money that way. Now, last point to trading these kind of markets, and this is most important and what most people tend to ignore, especially new traders, is reward to risk. Here's a little secret. It's not about how much you win. It's about how much you make. And you don't need to win every single trade in order to make a bunch of money. You can win 50% of them, less than 50% of them, and still make really good money as long as you have good reward to risk on every single trade you take. And that's way more important than what your win ratio is. And what that means is you should always be in a position where you have at least 2-to-1 reward to risk on every single trade. What that means is if you're risking $100, you can make at least $200. If you're risking $1,000, you can make at least $2,000. And scalable depending on what your goals are and what your account size is. But if you keep that kind of relationship, you don't have to win all the time, and you're not going to win all the time. I don't know a single successful trader that wins every single trade that they take. And they don't have to. It's not about winning all the time, it's about making money. And to make money, you just need to have good reward to risks with good setup criteria, and that's it. And that's really what you should be focusing on if you want to trade these kind of markets. So just to recap, find the one skill, the one trading setup that you're good at and gravitate towards that. Don't try to do everything or constantly change it. Make sure that setup criteria, that one skill, is flexible, has good reward to risk, has shorter duration. You can find yourself making really good money in this kind of market despite all the crazy things that are happening. Again, if you guys like content like this, be sure to like, share, give away all of our ad revenue at the end of every single month, and let me know in the comments what kind of video do you want to see next. Do you want more on wealth building topics? Do you want more trading specific strategy? Let me know in the comments. I'll be sure to circle through and answer your guys' questions, take it into consideration. We'll see you on the next one.